Hi everyone, in this video we'll be going over A-Level Accounting 2023 October-November Paper 2 question number 4. This is Paper 2 which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks, and the total time limit given for this paper is 1 hour and 45 minutes. Since question number 4 is of 30 marks, ideally you should be spending about 35 minutes in order to solve this question, and in this video as well we'll be attempting to solve this question under 35 minutes. So without any further delay, let's get started. Andreas owns a business manufacturing bicycles. The business operates 2 production departments, machining and assembly, and 2 service departments, stores and maintenance. The following information is available for 1 bicycle. So for 1 bicycle, our direct materials would be 45.60. We require direct labor for the machining to be 30 minutes, and we're given the rate per hour as well. We're given the direct labor for assembly rate as well as the time required. Then we're given the machine hours for machining department as well as the assembly department. Then the total budgeted overheads for the year ended 31st August 2023 are as follows: for indirect wages, factory rent and rates, and machine overheads. Then the following information is also available. Okay, this is our basis of apportionment. Then the machine overheads are apportioned on the basis of machine hours. Okay, we have the budgeted machine hours right here. Then we have indirect wages. So this will be apportioned on the basis of the number of indirect employees. Then we have factory rent and rates, and this will be apportioned on the basis of floor space. Okay, let's have a look at our question. We need to complete the table to show the apportionment of the budgeted overheads for the year ended 31st August 2023. We first need to divide our indirect wages among the 4 departments. And like I said before, the basis of apportionment would be our number of indirect employees. So the first thing that we need to do is figure out the total for our number of indirect employees. So that's 4 plus 12 plus 2 plus 2, which results in 20. Now, if we're trying to figure it out for machining department, we start with the total indirect wages given, which is 420,000. And we just utilize the appropriate fraction. In this case, out of the total indirect employees of 20, only 4 belong to machining department, so we use that fraction and get the amount of 84,000. So this will be the amount of indirect wages that will go towards the machining department. Let's write it down. Repeat the same process for assembly department. I'm not going to write it down, but I'm just going to say it. So we have the total of indirect wages to be 420,000. We multiply that by 12 divided by 20, and that will give the amount of 252,000 for assembly department. We repeat the same process for stores. So we start with a total of 420,000, multiply it by 2 divided by 20, which will result in 42,000, and that's the same amount for maintenance department as well. Now we can go towards factory rent and rates. Okay, like I said before, the basis of apportionment would be the floor space. So the first thing would be to figure out its total. That's 4,000 plus 5,600 plus 1,800 plus 600, which results in 12,000. Again, we're going to repeat the same process. So if we're trying to figure it out for machining department, we start with the total of our factory rent and rates, which is 30,000, and then we multiply it by the appropriate fraction, which in this case would be 4,000 divided by the total of 12,000. This results in a value of 10,000. So 10,000 is our factory rent and rates towards the machining department. Then we repeat the same process for assembly department. That will be 30,000 multiplied by 5,600 divided by 12,000, which results in the amount of 14,000. Now for stores, that's going to be 30,000 multiplied by 1,800 divided by 12,000, which results in 4,500. Then for our maintenance department, that will again be 30,000 multiplied by 600 divided by 12,000, which results in 1,500. Okay, now we can move towards our machine overheads. And we were told that the basis of apportionment for machine overheads was budgeted machine hours. And we can see that the budgeted machine hours is only present for machining and assembly. So we're only going to divide the total of 22,000 among this 2 department. The first thing that we need to do is figure out its total. So that's 34,300 plus 25,700, which results in 60,000. So if we're trying to figure it out for machining department, we start with the total of machine overheads, which is 22,000. We then multiply it by 34,300 and divide it by the total of 60,000. And this results in the amount of 12,576.67, but we can just round it off as 12,577. That's for the machining department. Then we repeat the same process for our assembly department. That will be 22,000 multiplied by 25,700 divided by 60,000, which will result in the value of 9,423.33, but we can round it off as 9,423. Let's write it down. Now we need to figure out the total overheads, which is just going to be the sum of indirect wages, factory rent and rates, and machine overheads. We need to figure it out for all four departments. So for machining department, that will be 84,000 plus 10,000 plus 12,577, which results in 106,577. Then for assembly department, that will be 252,000 plus 14,000 plus 9,423, which results in 275,423. For our stores department, that will be 42,000 plus 4,500, which results in 46,500. And for the maintenance department, that will be 42,000 plus 1,500, which results in 43,500. Okay, now we need to apportion the overhead from stores. So that's the total of 46,500. We are now reapportioning it to the remaining three departments. Let's have a look above. We need to figure out an appropriate basis of reapportionment. In this case, we're talking about the stores. So our appropriate basis would be the number of orders from stores. Again, the first thing would be to figure out the total. So that's going to be 2,100 plus 1,600 plus 500, which results in 4,200. Now, if we're trying to reapportion it to the machining department, we just start with the total amount for our stores, which we calculated to be 46,500. And we just need to multiply it by the appropriate fraction, which in this case will be 2,100 divided by the total of 4,200. This results in the amount of 23,250. Now we repeat the same process for our assembly department. So that's going to be 46,500 multiplied by 1,600 divided by 4,200, which results in the amount of 17,714.28, but we can just round it off as 17,714. Again, we need to repeat the same process for maintenance department, and that will be 46,500 times 500 divided by 4,200, which results in the amount of 5,535.71, and we can round it off as 5,536. Now, since we have reapportioned this amount of 46,500, we need to subtract this amount from the stores department. Then we need to figure out the subtotal, which is the sum of total overheads and reapportion of the stores. For machining department, that will be 106,577 plus 23,250, which results in the amount of 129,827. For our assembly department, that will be 275,423 plus 17,714, which results in 293,137. For our stores department, that will just be 0. And for the maintenance department, that will be 43,500 plus 5,536, which results in 49,036. And the subtotal for our total overheads will still be the same at 472,000. Now we need to reapportion the maintenance overheads. So the total for maintenance is 49,036. Let's have a look at the basis of apportionment, which will be maintenance callouts. Now we need to divide it among our two production departments. Let's figure out the total. So that's 210 plus 40, which results in 250. Now, if we're trying to figure it out for the machining department, we start with the total for the maintenance, which is 49,036. Then we divide it by the appropriate fraction, which in this case will be 210 divided by 250, which results in 41,190.24. So we can just round it off as 41,190. And for our assembly department as well, it's going to be 49,036 times 40 divided by 250, which results in 7,845.76. So we can just round it off as 7,846. Let's write it down. For apportionment of maintenance within our machining department, that was 41,190. For the assembly department, there was 7,846. And we need to subtract the exact same amount from the maintenance department. Now we can figure out the total overhead cost, which will be the sum of subtotal and our reapportionment from maintenance department. The total for our machining department will be 129,827 plus 41,190, which results in 171,017. For our assembly department, that will be 293,137 plus 7,846, which results in 300,983. And for maintenance, it will be 0. Again, the total of our overhead cost will be 472,000 intact. That's all for the first part. Let's move towards the second part. We need to calculate to 2 decimal places an overhead absorption rate for each production department using a suitable basis. Okay, we need to figure it out for the machining department. We need to divide the total overhead cost, so that's 171,017, by the higher of our budgeted machine hours and budgeted labor hours. Let's have a look above. We're given the budgeted direct labor hours and the machine hours right here, so we need to compare it. For our machining department, we can see that the machine hour is greater, which means that this is capital intensive, not labor intensive. So our overhead absorption rate will be based on our machine hours. We just need to utilize 34,300. This will give our overhead absorption rate for machining department to be 4.99 per machine hour. We repeat the same process for the assembly department. We start with the total overhead, which is 300,983. Then again, we need to compare the budgeted direct labor hour and the machine hour. In this case, we can see that our direct labor hour of 77,700 is greater than the machine hours, which means that this department is labor intensive. So we have to utilize 77,700 in order to figure out the overhead absorption rate. This will give the overhead absorption rate for our assembly department to be 3.87 per labor hour. This completes the second part. Let's move towards the third one. We are given additional information. We are given the actual results for the year ended 31st August 2023. We are given the total overheads, direct labor hours as well as the machine hours. We now need to calculate the over absorption or under absorption of overheads for each production department. Okay. This is for our assembly department. This is for the machining department. So in order to figure out the over absorption or under absorption of overheads, we just need to compare the actual total overheads to the budgeted total overheads. We're already given the actual total overheads. Let's write it down. For machining department, that's 226,952. For assembly department, that's 267,465. Now we need to calculate the budgeted total overheads. And we cannot use the budgeted total overheads from the first part of this question. That is because in order to compare it, we have to have the same basis for comparison. And the same basis in this case will be either our direct labor hours or the machine hours. This is where we utilize our overhead absorption rate. So in order to calculate the budgeted total overheads, we just need to multiply the overhead absorption rate to its relevant actual hours. So if we're talking about our machining department, we have our overhead absorption rate to be 4.99 per machine hour. So what we do in order to figure out the budgeted total overhead is we multiply 4.99 by the actual machine hours from the machining department, which is 44,120. So that will be 220,158.8. We can just round it off as 220,159. We now repeat the same process for assembly department. We have our overhead absorption rate to be 3.87 per labor hour. So that's just going to be 3.87 multiplied by the actual direct labor hours, which in this case is 72,580. This gives the value of 280,884.6. Again, we can round it off as 280,885. Okay, now we need to figure out whether there was an underabsorption or overabsorption. Always remember that if our budgeted total overheads is less than our actual total overheads, it results in underabsorption. And if our budgeted total overheads is greater than the actual total overheads, it will result in overabsorption. Okay, for machining department, we can see that our budgeted total overheads is less than the actual total overheads, which means that this is a case of underabsorption. And we also need to calculate the underabsorption amount, which is going to be the difference between these two values. So that will be 226,952 minus 220,159, which results in the value of 6,793. And we have to clearly mention that this is underabsorbed. We now repeat the same process for assembly department. In this case, we can see that our budgeted total overheads is greater than the actual total overheads, which results in overabsorption. Again, the amount for overabsorption is going to be the difference between these two amounts. That will be 280,885 minus 267,465, which results in 13,420. And we have to clearly mention that this is overabsorbed. Alright, this concludes the third part. Now we are given additional information. Andreas has been approached by a new customer wishing to make a special order for 120 bicycles with modifications to the customer's own specification. In order to complete the order, the following would apply for the manufacture of one bicycle. The total material cost would increase by 30%. Okay, let's have a look above. We were given the direct material in the question as well. Right here we can see it's 45.60. Now we have to increase it by 30%. So the new direct material is just going to be the initial amount of 45.60 and we need to increase it by 30%. This will give the value of 59.28. Then the direct labor hours in the machinery department would increase by 50% and an additional 15 minutes of direct labor hours would be required in the assembly department. Okay, so we first need to figure out direct labor for machining department. This will increase by 50% and we're talking about the time. So let's have a look above. For machining department, the direct labor previously was 30 minutes. Now we need to increase it by 50%. So that's going to be 30 times 1 plus 50%, which is also in 45 minutes. Now we need to figure out the direct labor for our assembly department as well. It will increase by 15 minutes of direct labor hours. Let's have a look above. Previously, for our assembly department, that was 105 minutes. Now we need to add 15 minutes to it. So that's 105 plus 15, which results in 120 minutes. Now, due to workers in the assembly department already working at full capacity, these workers would have to work overtime to complete the order at a premium of 25% on the usual direct labor rate. So we have to provide additional labor rate towards the workers working in our assembly department. So we need to increase our rate by 25% in this case. Okay, and we're talking about assembly department that has the rate of 12 per hour. We need to increase it. So that's direct labor for the assembly department. It was 12. Now we need to increase it by 25%. So that's just going to be 15 per hour. And this is the basic rate plus the overtime premium. Now for the fourth part, we need to calculate the direct cost of producing one bicycle for this special order. We can start with our direct material. We already figured it out to be 59.28. Then we can add the direct labor. And for direct labor, we have to consider two different departments. So the first one would be our machining department. For machining department, we know that we need 45 minutes for one product. And the rate for machining department was given to be 10 per hour. But we are not utilizing 1 hour. We are only utilizing 45 minutes. So the rate is just going to be 10 times 45 divided by 60. This is again application of the unitary method. This will give 7.5. We repeat the same process for assembly department. The new rate was 15. And the total time required for one product is 120 minutes. Again, we need to multiply it by 120 divided by 60, which results in total for assembly department to be 30. Now we can get the total direct cost. That will be 59.28 plus 7.5 plus 30, which results in 96.78. This concludes the fourth part. Let's move towards the next one. In order to remain competitive, Andreas wishes to achieve a 30% gross profit margin on all work. We need to prepare a statement to show the total selling price that Andreas should quote to the customer in order to achieve a 30% gross profit margin on the order. Okay, so we already have the direct cost per unit. So let's start with the total direct cost. And the number of units for this new customer was 120 bicycles. So in order to get the total direct cost, we can just multiply 96.78 by 120. This gives our total direct cost to be 11,613.60. Then we need to add our overheads. Again, we need to consider the overheads for two different departments. We first start with our machining department. And we utilize our overhead absorption rate. Okay, for our machining department, our overhead absorption rate is 4.99, and this is based on machine hour. So we need to look for the time for machine hour as well. So for machining department, for machine hours, it's 20 minutes. And we're talking about 120 units. So that will just be our overhead absorption rate of 4.99 multiplied by the time, which was 20 minutes divided by 60 minutes. This is the application of unitary method. Then we need to multiply by the total units so that we get the total overheads. And for machining department, it is just going to be 119.60. We repeat the same process for assembly department. We start with the overhead absorption rate, which is 3.87, and this is per labor hour. So we need to utilize the time for the labor hour. And we calculated the new time for assembly department. For direct labor, it was 120 minutes. Okay. So that is just going to be our overhead absorption rate of 3.87 multiplied by the time. So that's 120 divided by 60. Then we multiply it by the total number of units, which is 120. And this gives the overhead for assembly department to be 928.80. Now we can get the total cost by adding all of these. So the total cost is 11,613.60 plus 119.60. Sorry, that should be 199, not 119, because it's 4.99 times 20 by 60 times 120. Okay, so our total cost is 11,613.60 plus 199.60 plus 928.80, which is also 12,742. Okay. Now we also have a gross profit margin of 30%, which means that we need to add the profit of 30% in order to get our selling price. But remember that this is not the markup. This is the gross profit margin, which means that 30% of selling price is the profit. So let's create an equation. The profit is just going to be 30% of selling price. And remember that selling price is just the sum of profit and cost. So the profit will be equal to 0.30 times profit plus cost. Let's input the value for cost in this equation. So that will be P equals to 0.30 times P plus 0.30 times the total for our cost, which is 12,742. So this means we can bring this to the other side. So that's 1 minus 0.30, which results in 0.70 times P. That will be 0.30 times 12,742. This will give our profit to be 0.30 times 12,742 divided by 0.70, which results in the value of 5,460.86. Now, if you guys want a generalized formula, in case of gross profit margin, if you have to figure out profit, that is just going to be the gross profit margin multiplied by cost divided by 1 minus gross profit margin, which is exactly what we did in this case, because this is 30%, that's the gross profit margin, times our cost divided by 1 minus gross profit margin, which is 0.70. Okay, so that's 5,460.86. Now, in order to get our selling price, we just need to add these two. That will be 12,742 plus 5,460.86, which results in 18,202.86. This concludes the fifth part of this question. Let's move towards the sixth one. We have additional information. Having received the quotation from Andreas, the customer has stated that he will commit to a regular monthly order of 100 of the special bicycles if Andreas will offer a 10% discount on the quoted price and allow 2 months credit. Okay, Andreas' business is successful, though managing cash flow is often difficult. So if cash flow problems is there within her business, we cannot really allow 2 months credit, because 2 months credit just means that this customer will pay for the goods after 2 months. So we'll only be getting the cash inflow after 2 months of selling the goods. Okay, now we need to advise Andreas whether he should accept the terms offered by the customer. We need to justify the answer. And this is of 7 marks. Okay. So since we will have a regular monthly order from this customer, they might also become a major customer over time. That's possible. Let's write it down. New customer may become a major customer over time. Now, if we're offering a 10% discount, let's have a look at our selling price. Since we have a guaranteed gross profit margin of 30%, Andreas will still earn some profit, right? Because we have a profit of 5,460.86, and even after allowing a 10% discount, there will still be profit in this case. So we can write that down as well. Terms offered will still produce a profit for the business. And again, we're talking about credit. So what we can say is that Andreas should only accept the terms if sufficient creditworthiness checks are completed, because we need to know whether or not this new customer has the ability to pay us back after 2 months of credit. So Andreas should only allow credit if sufficient creditworthiness checks are completed. Again, since our company has difficulties in managing cash flow, 2 months credit terms may compound the cash flow difficulties. So it just means that we will have added cash payments to be made, and we will only receive our cash after 2 months. So that might make it even more difficult in order to manage the cash flows. Let's write it down. 2 months credit terms may compound the cash flow difficulties. And if we are offering 2 months credit to this new customer, maybe the existing customer will also try to negotiate better credit terms. That will cause even more cash flow problems for Andrea's business. Let's write it down. Will the existing customers try to negotiate better credit terms? Then we can also question whether or not the customer is sure about the regular monthly order, because if there is no regular monthly order, it's not really advisable for Andreas to accept this new customer. Let's write it down. Are the new customer sure of the continuity of the orders? Now, based on these factors, we now need to make a decision for Andreas. Personally, I would suggest that Andrea should not accept the terms offered by the customer because there will be added cash flow problems. And since she has already set out a gross profit margin of 30%, allowing an additional 10% discount would not make it possible to achieve the set gross profit margin. So that would be my main reasoning behind the decision. The terms offered by the customers should not be accepted as the required 30% gross profit margin will not be achievable. Alright, that's all for the fourth question. If you found this video useful, make sure you like this video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.